Imagine waking up to the news that a media company linked to a former U.S. president has just poured $2.5 billion into Bitcoin, not as a speculative side bet, but as a core part of its official balance sheet. Amid the chaos of the 2024 election cycle, Trump Media and Technology Group, owner of the controversial Truth Social platform, has made one of the boldest, riskiest moves in corporate finance. What does this mean not just for Trump, his company, and Bitcoin, but for the very future of corporate America? Is this a stroke of genius or the disaster of the decade? Welcome to a story where politics, technology, and trillions of dollars collide. Today we'll unpack the origins and explosive growth of corporate Bitcoin treasuries, dissect TMTG's motivations and methods, and ask, is this the start of a new financial era or a ticking time bomb hidden under a gilded desk? Let's rewind, because to understand why this announcement is shaking Wall Street and the halls of Congress, we need to first understand what's happened to Bitcoin and why major firms are suddenly hoarding it like gold in 1933. Just over a decade ago, Bitcoin was the domain of libertarians, coders, and those dreaming of an alternative to the global banking system. Back then, no one could have imagined Fortune 500 companies would race to stuff it into their treasuries. But that's exactly where we are today. The path from obscure digital token to Wall Street darling is a tale of volatility, vision, and, yes, a fair share of scandal. Let's set the stage. It's 2017. Bitcoin smashes past $10,000 for the first time, making headlines across the world. Skeptics dismiss it as a bubble. Regulators scramble. But something remarkable starts to happen. A handful of tech visionaries see potential where others see risk. Among them is Michael Saylor, CEO of MicroStrategy, who turns heads by committing hundreds of millions of his company's cash reserves to Bitcoin. Wall Street gasps. Others quietly take notes. Fast forward to 2024, and the landscape has fundamentally changed. Bitcoin now boasts $1 trillion market cap, and a patchwork of legislation has slowly legitimized corporate crypto holdings in the US, EU, and much of Asia. Major companies, ranging from payment processors to manufacturing giants, have started allocating a percentage of their treasury to Bitcoin and other so-called hard money assets. Why? The reasons are both practical and philosophical. Let's break it down. First, inflation has been eating away at the purchasing power of cash reserves relentlessly. Post-pandemic monetary stimulus and political uncertainty have led many CFOs to question the wisdom of holding billions in US dollars. As analyst Jesse Myers recently wrote, over the last 2 years, an exodus from fiat assets, bonds, and money has already begun. Hard money assets, BTC, and gold are where things are shifting. Second, blockchain technology has matured. Custodians like Anchorage Digital and Crypto.com now provide institutional-grade storage and compliance solutions, meaning the technical hurdles are lower than ever before. Regulatory bodies, long viewed as the biggest threat to crypto adoption, are now entertaining over 70 applications for crypto-related ETFs. The air of legitimacy grows stronger by the quarter. And then there's the cultural shift. Once seen as subversive, Bitcoin is now fitting into the narrative of financial freedom and individual sovereignty, a message that resonates with a world increasingly skeptical of traditional banking. For politicians and corporations alike, adopting Bitcoin isn't just a financial maneuver, it's a branding statement. This brings us to today's protagonist, Trump Media and Technology Group, or TMTG. Born in 2021 out of Donald Trump's frustration with mainstream tech platforms, TMTG set out to build a right-leaning social media ecosystem with its flagship, Truth Social. Initially, the market responded with enormous hype. The company went public via SPAC, its shares soaring in a frenzy of political enthusiasm and retail investor optimism. But as is often the case, reality intervened. By 2023 and early 2024, TMTG's social platform was losing steam. User growth stalled. Revenue projections fell flat. Critically, Trump Media began facing harassment and discrimination by financial institutions, as CEO Devin Nunes bluntly put it. Banks and payment processors, wary of regulatory blowback and political risk, began cutting ties or tightening conditions. For TMTG, access to the global financial system was now a strategic vulnerability. This is where the Bitcoin plan comes in, and why it's so explosive. On May 27, 2024, TMTG confirmed a $2.5 billion capital raise, $1.5 billion from a stock sale, and $1 billion from convertible senior secured bonds, remarkably, at a 0% coupon. The stated goal? To purchase Bitcoin for the company's treasury. No half measures. According to TMTG, Bitcoin is an apex instrument of financial freedom. Not only would this move potentially shield the company from traditional banking risks, but it could also turn the company's balance sheet into a direct bet on Bitcoin's long-term appreciation. The market's reaction was immediate and visceral. TMTG's shares sank over 12% on the day of the announcement. Investors, used to seeing crypto as a speculative side hustle for corporations, were suddenly faced with a company shifting its core assets into perhaps the most volatile instrument in modern finance. Why would TMTG take such a risk? The answer is as much about ideology as it is about numbers. First, there's the financial freedom narrative. For Trump and his followers, traditional banks are viewed with growing suspicion. By holding Bitcoin, TMTG could demonstrate independence from Wall Street and the woke capital, often blamed for deplatforming and financial censorship. In a statement brimming with populist defiance, TMTG's leadership accused the Financial Times of having dumb writers listening to even dumber sources when early news of the plan leaked. The message was clear: we're not backing down. Second, there's the search for a new business model. As Mike Stegemuller, a close industry observer, points out, TMTG's original social media business model has run out of steam. With engagement flatlining, the company desperately needs a fresh story for investors, and potentially a new set of customers. Bitcoin, as both financial asset and ideological symbol, fits the bill. Third, corporate treasuries everywhere are facing the same dilemma. TMTG's move could signal a new era of corporate treasury management, says Chris Klein, co-founder of Bitcoin IRA. With inflation eating away at cash and geopolitics making global banking ever riskier, companies are taking a long, hard look at alternatives. Bitcoin, now widely seen as digital gold, offers a hedge, albeit a wild one. But there's a flip side. Bitcoin is notorious for its gut-wrenching volatility. In just the past year, it's rocketed to new all-time highs and plunged by over 30%. A single tweet from a major influencer can move the market by billions. For a company whose shares are already under pressure, such exposure is a double-edged sword. As Maxim G., a crypto finance professional, puts it, Bitcoin exposure is a double-edged sword. It can bring incredible upside and equally spectacular losses. And then there's regulation. Crypto's legal status remains a battlefield, especially in an election year. While the SEC is reviewing over 70 applications for crypto ETFs, it has also shown a willingness to pursue aggressive enforcement. TMTG's move is bold, but it could face a regulatory crackdown if sentiment shifts. Let's not forget the optics. By tying its fate to Bitcoin, TMTG is effectively merging two of the most polarizing brands in America, Trump and crypto. If the price of Bitcoin soars, TMTG could become a case study in visionary leadership. If it crashes, critics will be merciless. The company is taking steps to shore up its strategy. Anchorage Digital and Crypto.com, leaders in institutional-grade cryptocurrency custody, will handle TMTG's Bitcoin reserves. Crypto.com is even partnering with TMTG to develop crypto-based ETFs. The infrastructure is serious, and the ambition is clear. TMTG wants to be seen not just as a media company, but as a player in the future of digital finance. So here's the burning question. Is TMTG's Bitcoin bet a shrewd move that will insulate it from the unpredictable world of traditional finance? Or has the company just exposed itself to an entirely new level of risk? As more and more companies follow this path, is corporate America on the verge of a Bitcoin-powered transformation or a financial meltdown on an unprecedented scale? And perhaps most importantly, what does this mean for Trump, for his political ambitions, and for anyone with skin in the American economy? The stakes have never been higher. In the second half of this video, we'll dive into what happens next, the potential scenarios that could play out for TMTG, for Bitcoin, and for the ecosystem of companies now watching from the sidelines. But before we look forward, ask yourself, in a world where money, media, and politics are colliding like never before, who really stands to win, and who sets the rules? Let's peer into the future and imagine where TMTG's $2.5 billion Bitcoin gamble could lead, not just for the company, but for the entire corporate and political landscape. First off, consider the unprecedented nature of a media conglomerate led by a former U.S. president holding such a vast trove of Bitcoin. For context, at current prices, TMTG would join the ranks of institutional giants like MicroStrategy and Tesla in terms of Bitcoin reserves, but with a uniquely political twist. This sets the stage for three possible scenarios. ranging from triumph to turbulence to total transformation. In the first scenario, TMTG's boldness pays off. Bitcoin's price soars over the coming years, propelled by growing institutional adoption, global monetary instability, and the ongoing exodus from traditional fiat assets. In this world, TMTG's balance sheet balloons. Not only does this secure the company's financial future, but it also gives Truth Social and its associated platforms the gravitas to launch new features, crypto-based subscriptions, direct peer-to-peer payment systems, even the potential for decentralized news distribution. Suddenly, TMTG goes from being a niche social platform to a disruptive fintech media hybrid, inspiring other corporations to follow suit. Industry analyst Chrysler Holloman puts it succinctly: if TMTG can successfully integrate cryptocurrency into their core operations, they could unlock revenue streams and customer bases that never considered them before. Imagine regular users onboarding to Truth Social not just for content, but to trade, pay, and store wealth, all under the banner of financial freedom. But for every high-risk, high-reward bet, there's a darker scenario. What if Bitcoin's price, volatile as ever, plummets after the purchase? Consider the history. Within the last decade, Bitcoin has endured drops of 50–80% during bear markets. If even a moderate correction occurs, TMTG would see billions evaporate from its balance sheet overnight. This would not only tank the company's share price, already under pressure after the announcement, but also put its operations, staff, and future innovation at risk. In this case, critics like Maxim G would be proven right. Bitcoin exposure is a double-edged sword. When the market turns, it cuts deep. And the regulatory wildcard can't be ignored. The SEC is currently reviewing over 70 applications for new crypto-related exchange-traded funds, ETFs. If U.S. regulators crack down, or if Congress enacts restrictive laws, TMTG could find its crypto-based ambitions stymied, or its Bitcoin reserves unfrozen, or even seized under new compliance rules. Alternatively, if regulation takes a pro-innovation turn, TMTG could be at the forefront. Partnerships with Crypto.com for new ETFs or with Anchorage Digital for secure custody could position TMTG as both a media brand and a financial powerhouse. Now let's zoom out to the ripple effects. The move sends shockwaves across Wall Street and Silicon Valley. Corporate treasurers, under pressure to boost returns in an era of low interest rates and inflation, see TMTG's strategy as a precedent. If the bet works, expect a new wave of publicly traded companies jumping on the Bitcoin bandwagon. The so-called Bitcoin treasury strategy could become as mainstream as stock buybacks or real estate portfolios. In 20 years, analyst Jesse Myers predicts, institutions might control half of Bitcoin's entire supply. But there are geopolitical implications too. With TMTG's Bitcoin stash, a company tied to a former president becomes a player not just in media, but in global finance. If Bitcoin continues to emerge as a form of digital gold and a geopolitical reserve asset, TMTG could wield unique leverage, especially in the context of currency wars, sanctions, and the shifting alliances of the digital age. Some experts even warn of the blurring boundaries between corporate, political, and financial power. A single company, with political leanings in a crypto war chest, might influence debates about monetary policy, regulation, and even election integrity. This isn't just about risky investment. It's about rewriting the rules of engagement for corporations and political actors. As Mike Stegemuller noted, TMTG's original business had run out of steam. This is a radical pivot, and if it works, it's a blueprint others will follow. What can ordinary viewers take away from this high-stakes drama? First, the world of corporate finance is changing, fast. The age of staid, conservative treasuries is giving way to a new era where Bitcoin and other digital assets are not just tolerated, but embraced as strategic assets. Chris Klein puts it bluntly, this move could signal a new era of corporate treasury management. But with reward comes risk. If you're an investor, this story is a cautionary tale. Diversification is essential, but betting the farm, literally billions, on a volatile asset is a move only the boldest or the most desperate will make. For employees and users of platforms like Truth Social, the company's fortunes are now tied to the swings of the most unpredictable market in history, Bitcoin. Paychecks, tech budgets, even the platform's very future could rise or fall based on what happens in the crypto markets. For business owners and executives watching this, the lesson is twofold. First, crypto is here to stay. Even the most traditional industries are experimenting with Bitcoin and blockchain-based services, from supply chain to payroll to marketing. If you're not at least crypto curious, you risk being left behind. Second, and perhaps most importantly, don't mistake speculation for strategy. What separates visionaries from gamblers is not just appetite for risk, but a plan for integrating new assets into the business model, for navigating regulation, and for building resilience against volatility. TMTG's experiment will be a case study for boardrooms and business schools, for better or worse. And if you're wondering whether it's time to stuff your own balance sheet with Bitcoin, remember, institutional support is changing the game, but retail investors face very different risks. Quality custody, regulatory clarity, and diversification are essential. If you're enticed by TMTG's move, study how they're handling partnerships with Anchorage Digital, Crypto.com, and consider what safeguards you have in place for your own assets. So, where does this leave us? TMTG's $2.5 billion Bitcoin acquisition has already made history. It's a move that broadcasts confidence in the future of digital money, but also leaves the company exposed to wild swings and the ever-watchful eyes of regulators and political adversaries. In answering the big question, will this redefine corporate strategy or expose TMTG to unprecedented peril? The real answer is both. If Bitcoin rises and digital assets become mainstream financial tools, TMTG will be remembered as a visionary risk-taker, a company that broke the mold and set the standard for a new class of corporate actors. If the bet goes bad, TMTG may become a cautionary tale for reckless speculation. But beyond profit and loss, TMTG's Bitcoin gamble marks an inflection point. The lines between business, politics, and finance are blurring. Corporations now seek not just profit, but influence, and sometimes protection, from the volatility of both markets and the political system. Whether this is the dawn of a new era or the start of a dangerous arms race, only time will tell. And here's a final secret fact that almost no one is talking about. With Anchorage Digital and Crypto.com managing TMTG's Bitcoin and plans for crypto-based ETFs in the works, the company may be positioning itself as a bridge between old guard finance and the emerging decentralized economy. If TMTG succeeds, we might look back on this as the turning point not just for one company, but for how corporations and even governments interact with digital money. So what do you think? Visionary leap or reckless gamble? Is this the model for the corporate treasuries of tomorrow, or a headline-grabbing diversion destined for disaster? Let us know your thoughts in the comments below. If you want to stay ahead of the curve on crypto, finance, and the future of money, make sure you're subscribed to our channel and hit the bell so you don't miss our next deep dive.